Good day, students, and welcome to our ATS3 taxation lectures for ICANN students. Today, we are taking up the topic called Value Added Tax, also called VAT. For most of the time we are going to be spending here, we will be solving past questions from ICANN Insight 3. Now, from the solving of questions, I'll be bringing out the salient points that you will be needing to pass your exam. The topic once again is value added tax. My name is Chimaroke Waji. Now we have March 2024, question number 2. I'll be concentrating on the calculation part of the question, which is 6.5 mark here. This other one, the 3 variants of value added tax. We'll get to look at it, but I'll have to show you from the answers. Okay, let's look at the 3 variants of value added tax in Nigeria. Let's show you the answers here and discuss it. We have the gross product variance. Then we have the income tax variant and the consumption variant. So the gross product variance allows deduction for all purchases of raw material and components. Tax is levied on all sales with no deduction for business inputs. No deduction is made for capital goods such as plant and machinery and depreciation. So this is the gross product variant. Then the income tax variant allows deduction for purchases of raw material and components plus depreciation on capital goods. The economic base of income variant is the net national product, that is net investment, which is gross investment minus depreciation is taxed. Then the consumption variant. With the consumption variant of VAT, the economic base is equivalent to total private consumption. Here, deductions are made for all business purchases and capital assets. Of all the 3 variants of VAT, the consumption variant is popular, widely used by many countries in Nigeria. So that's for the A part of the question. Let's look at the B part, which is our major focus. Emilocon Nigeria Limited was incorporated many years ago, and it commenced business in February 2018. The company is engaged in the incorporation and sale of chemical products. The chief accountant of the company resigned in 2020, and in a scheduled meeting with the managing director, he informed you that the management of the company would want to ascertain the VAT remittable. So that's the key word here, VAT remittable. Because the question is saying they want to ascertain the VAT remittable, it's possible that the question will be asking you to calculate the VAT remittable to the relevant authority based on the following financial transaction. So the relevant authority here, because this is a company, whether you're a company or a business, all VAT goes to the FIRS. Now, these are the transactions that took place in June 2020. Now, VAT is a tax on your vatable consumptions. Let me use that word, vatable consumption. So we we looked at the first part. We said consumption variant is mainly used in Nigeria, and so your vatable consumptions in a month is VAT is chargeable month by month, and VAT is payable on or before the 21st day of the month following the month where the consumption of these VATable items were incurred. And there's something called output VAT and input VAT. What is output VAT? Output VAT is the VAT a business collects from its customers as a result of selling VATable products to them. And so let's use an example. Go Getter Professional is a company, and it does business with a lot of people and collects fees, makes revenue from them. So as Go Getter is charging them these fees, making the revenue, it is also adding a VAT element to its fees. So when these clients or customers are paying Go Getter, they are paying plus the VAT. And so that VAT the customers pay to Go Getter is output VAT. This is because Go Getter is doing something, is giving out its output. So Go Getter is giving out output, and the VAT they collect is called output VAT. Now, before Go Getter was poised and ready to give out this output, Go Getter would have sourced for materials and other things that will enable it to produce this output. So when Go Getter is making these purchases and sourcing these things out, it is called input. And as Go Getter is sorting out this input, Go Getter would have been charged VAT. And so Go Getter suffered a VAT called the input VAT. So what happens here is when Go Getter collects an output VAT, it will deduct the input VAT it has suffered. And so there is a net amount called the net VAT. It is the net VAT that is the VAT remittable. So your net VAT or your VAT remittable is the difference between the output VAT and the input VAT. Now here, the output VAT should be bigger than the input VAT for there to be a VAT remittable. If the output VAT is bigger than the input VAT, there will be a positive VAT remittable. So you have a surplus, an excess, which you have to remit to the authorities. Now, if your input VAT is smaller, if your output VAT is smaller than your input VAT, what it means is that you have a negative VAT. That negative VAT means this is VAT reimbursable. So it means that the authorities are supposed to reimburse you the extra that you suffered. And so the authorities will not give you this money in cash. You will be allowed to carry it to the next month where you will not apply it and to nil off future VAT collected. Now, you may wonder, is there now a situation where your input VAT and your output VAT could be equal? Yes, it's possible that your output VAT equals your input VAT, and in that case, there is no VAT remittable or there is no VAT reimbursable. So this is going to be zero VAT. Now, don't get confused. Zero VAT payable is different from zero rated VAT. So the types of VAT we have here, we have the zero rated VAT. These are items in the VAT list, but their value is zero. Then we have VAT exempt. These are items that are not even in the VAT list. It means whenever you carry out transactions on these items, you do not even charge VAT. So you can even suffer VAT for it. You can't charge VAT for it. But those items in the zero VAT, you you are going to charge a 0%, but it's possible that you may have um, suffered input VAT just to get to that point where you will give them a zero rated VAT. All right, so the VAT rate in Nigeria beginning from February 1, 2020 is 7.5%. Before February 1, 2020, that is ending in January 31st, the rate was 5%. So in the question, please look out for the dates, the month it relates to, for you to know the appropriate VAT to charge. And so we are looking at this question. It's saying here that you are doing a transaction that took place in June 2020. So that means you are going to be paying this VAT on or before July 21st, 2020, and you are going to be charging at 7.5. Now let's look at the services here, or the things, the elements here that you are ascertaining. Now, we found out that the people had paid VAT or so because they said they want to ascertain the VAT remittable. Okay, they have not paid VAT, but they want to see how much they will be paying as VAT. So here, this is the total value. Before we come to all those intricacies, let's look at the requirements. Compute the VAT remittable to the relevant tax authority in July 2020. So let's go straight ahead. The name of this company is Emilocon. That's a Nigeria name. So start here, Emilocon. So Emilocon Nigeria Limited. Okay, this is VAT payable to FIRS on or before July 21, 2020. So that's the due date of payment of this VAT. All right, so let's start our operations immediately. All right, so this is what we are going to do now. We are going to do a 2 naira sign. Okay, so let's begin. Now, we said here, this is the total value of taxable supplies, goods and services, including exempted and zero rated supplies. So this is the whole gross. So this is gross revenue. Gross revenue. Okay, this is the gross revenue received so far. It includes the, the revenue received from vatable items, received from zero rated items, revenue received from tax and VAT exempt items. So what we do here now, we'll bring this revenue. So that's the first thing. Total value of taxable supplies. So I'll say here, total value of all supplies. So this is the whole supplies you made in the month, 18,600,000. So I will come here, 18,600,000. So this is the whole thing here. Now, we are not going to charge VAT on all of this because there are zero rated items here and there are VAT exempt items, and you need to remove them. So let's see if we are given that. Now we are told value of exempted items or zero rated supply that was included in A. Of course, this is 4,800,000. This is the amount we are supposed to remove from 18,600,000. So we have value of zero rated and exempt items. So value of exempt stroke zero rated items. We are told is 4,800,000. So we need to remove this value. These are the sales value. So we need to remove this 4,800,000 from this 18,600,000. So when we do that, what do we have? 18,600,000 minus 4,800,000. And we have 13,300,000. 13,300,000. Sorry, 13,800,000. So we have here 13,800,000. Okay, so that's it here. So what do we call this? We'll call it value of that. Okay, value of vatable supplies. So this is value of vatable items only. So that's this amount here. So because these are the things we supplied, these are the services we carried out, these are the whole things that we receive as revenue, is going to become the VAT on them is going to be our output VAT. So we say output VAT. Your output VAT, so let me underline this. Your output VAT is going to be 7.5% of 13,800,000. So let's do that now. 13,800,000 is here. We'll multiply by 7.5 divided by 100. And that gives me 1,035,000. 1,035,000. So I'll put my answers here. 1,035,000 will be written here. 1,035,000. Let me write that well. 1,035,000. So that's your output VAT. So we are done with output VAT. Let's see if we can calculate our input VAT. Now your input VAT will be on purchases. Now we have VAT on domestic supplies, purchases from which invoicing requirements have been met. Now this is not your purchase value. This is VAT that you have suffered on them. Okay? Unlike the one for sales here, we are giving the value. In this question, they gave us the VAT suffered on them. If we were not given the VAT suffered on them, but we are given purchases, we would have recorded the purchases, then later found the output, the input VAT. But now we have been given VAT on purchase and supplies, VAT on domestic supplies stroke purchasing. All right, so and that's 110,300. So I'll come here. Sorry. So this is VAT on domestic purchases. For the sake of space, I'll use just domestic purchases, and that's 110,300. This is a VAT amount. So because we've given a VAT here, every other thing that comes under it should be VAT. If we are saying value of items without VAT, we'll work out the VAT and put the answer. But let's hope everything will be giving us in VAT. Okay, I can see that this is VAT. All right, now we have VAT on import. Now, what is import here? Import are the items that you brought from overseas, and you're supposed to sell these items or use it to make something that was supposed to be used for vatable sales. So this is VAT on import, which is 285,600. So I'll write it down now. VAT on import, VAT on import. What's the amount again? 285,600. 285,600. Right? So now we look at it now. VAT on purchases not wholly used in making vatable supplies, 62,000. What does it mean? Now, this 110,300 is the total VAT on domestic supply, right? Now, we expected that everything here should be used for making vatable supply. But, we found out that not all the things we supplied are vatable. Some of them are zero rated, some of them are VAT exempt, but mostly they may be zero rated. But now you see here, VAT on purchase is not wholly used in making vatable supply. It's possible that some of these items here, this 100,000, 110,300, some of the items you bought were not used in making your vatable supply. So those ones that are not used for making vatable supply, the VAT you incurred on them, you cannot claim them back because you have become the final consumer on them. If they are not used to making vatable supplies, you have become the final consumer and you are going to bear it. So the VAT suffered 62,000 is VAT suffered by the company as a final consumer. They are not using the value of that purchase in making sales. So it means they should not transfer the value of 62 to the final consumer. So we are going to remove that. So this 62 is inclusive in the 110,300. So we're going to remove that. So let's say VAT not wholly used in supplies. I think it's 62,000 So this is 62,000. So we are as good as removing the 62,000 from 110,300. But this 285,600 stands. Let's go further. We are told that, okay, so what I should be doing, I should be ticking them out when I use them. Okay, so I've used this, I've used this, I've used this, I've used this, I've used this. So that's it. Now, VAT paid on equipment. VAT paid on equipment. Of course, the equipment was used in making VATable goods and services. But the equipment itself, who is consuming it? It is being consumed by the company making a VATable product. Who is the final consumer of the equipment? It is the company. So VAT on equipment is borne by the company. Note here that equipment is a capital asset. It is not purchases. So purchases are something that should be used for resale. Purchases is made with a view to resale or to convert it from raw material to finished goods. But equipment is an asset. So VAT on asset do not qualify for reimbursement. So we will ignore it. So in this point now, I'm going to tick a bad here. Yes, we have used it, but we have treated this, but we are not going to include this figure. VAT on professional fees paid. Professional fees is not part of your purchase. Who consumed the professional fee is not the final consumer but the company. And so this is not going to be included because it doesn't qualify for reimbursement from sales. Bank charges, VAT inclusive. Bank charges is borne by the company. It's not purchases. So it's only thing here that will be VATable or VAT worthy is VAT on purchases and VAT on import. Import is in a view to making sales. All right. Then the other one that is um, available for claim and for remittance is the VAT on sales. Of course, we have to remove the zero rated and that's all. So we've have everything we want here. We've considered everything now. So what do we do? This is VAT. What we are going to get now is our input VAT. So I'm going to say input VAT. Of course, we're not going to be working them out because all of these are VAT. Unlike the first ones that are values, sales values, revenue values, we now have to compute VAT and charge at 7.5. In this case, all these values were already given to us as charged by 7.5. These are the final figures that we have after we've charged 7.5. So all I just need to do is to add these two and remove this down one here. So let's do that immediately. So we have 110,300, right? Plus 285,600. Now minus 62,000. That gives me 339, no, 333,900. That's my input VAT, 333,900. So say 333,900. Now, normally your input VAT is supposed to be deducted from your output VAT. If you can see now, your input VAT is bigger, no, it's smaller than your output VAT. So there is going to be a VAT remittable. So when you deduct this, so what do you have? I already have this in my calculation. Okay, let's calculate again, 1035,000 minus 333,900. That will give you 701,100. 701,100. So this is your net VAT remittable. So
This meeting is being recorded.
now there is something here which I failed to explain to you, which has made our answers not to be exactly correct. Let's go back to these sales. This is the value of all sales inclusive of VAT. So this is VAT inclusive. So let me do something here. This is VAT inclusive. So this is, sorry, let me check a different color. This is VAT inclusive. So I'll call it, let me say inclusive. So I should be able to remove the inclusiveness. So of course, this is also VAT inclusive. Now my output VAT when dealing with VAT inclusiveness should not be 7.5 over 100. Because when I say 7.5%, I am saying it is 7.5 over 100. I will need to remove, because now what we mean by VAT inclusiveness means there is VAT in this revenue. There is VAT in this revenue. Normally, you are not supposed to charge VAT on a revenue that has VAT. Because when you charge 7.5 of it, you're also charging 7.5% of the VAT that is inclusive. So there should be a way for you to remove, there should be a way for you to remove the VAT element out of this so that you'll be charging on VAT exclusive. So normally, when we are giving VAT inclusive, the formula changes. So the formula will now be 7.5 divided by 107.5. So anything we have up here, we add it to 100. 7.5 over 107.5. So let's redo this. So we have 7.5 divided by 107.5 times 113,800. So you see now the VAT amount has reduced to, you see, before it was higher because we are charging VAT on VAT item, on VAT in itself. So but now we are charging VAT on pure revenue is 962,791. 962,791. So I'm going to, if you are to be in the exam hall, all you just need to do is just to cross this. So let me do it as if I'm in the exam hall now. I'll just cross this. And I will say 962 9 what? 962,791. 962,791. So this is 791. Then all other ones are correct. So all I just need to do here is to cross out this. This will change. So your final figure. So all you may just need to do here now is to cross this. Sorry. Just to cross it out neatly. Cross it out neatly. So when you've done that, you now write your final figure here. Let me use the same color. Net VAT. Let me use the word payable. Sorry. Payable to FIRS. So let's get the new figure, which should be smaller than 700. So I will just use this as it is, minus 333,900, and I will get 628,891. 628,891. 628,891. So this is the correct answer. So you see here, you should be very careful. To know when to use VAT inclusive or VAT exclusive. So this is a correct one. This is a correct answer. These ones here are an error that we had in the answers. But in the exam hall, because you use 7.5 over 100, this is the only thing here that you will get deducted by, I think, a half mark. This is the only part that you will suffer deduction. And because you got this one as a result of correct calculation, you will not suffer a deduction from this 701,100, even though the right answer is 628. Okay, because when doing this professional exam, they are not looking at more of how accurate you are. Of course, accuracy is key, but they're trying to see examine whether you know what you are doing. So because you know what you are doing, it's just that the only thing that you missed out was, instead of using 7.5 over 107.5, you use 7.5 over 100. So it is this figure here that made it to bring this erroneous answer, which you suffered half the mark. Okay, so that's just it for this particular question. All right.
This meeting is being recorded.
Now that we've seen the correct way to calculate VAT when we are giving VAT inclusive and some other items here, let's look at a second question. Now, this is going to be taken from the insight of September 2023, question number 3. So this is question number 3 here. Now let's look at this question. It carries 10 marks for the calculation. Doing Manufacturing Ventures is based in Omi Adio, Oyo State. The company sold its valuable products to Ekemode Wholesalers Ventures for 4 million in 2021. Ekemode wholesalers in turn sold the product to a retailer, Mrs. Egunjobi, for 7 million, who finally sold to consumers for 8.4 million. You assume that there was no closing inventory at each stage of the transaction. Question here is to compute the total value added tax payable to the Federal Inland Revenue Service. All right, so let's look at this. This is let's indicate the question type, question number. So this is Insight, September 2023, question number 3. Now the question is asking you for VAT payable to the Federal Inland Revenue for 2021. So this is VAT payable to FIRS for year 2021. That's what you are asked to do. All right, you can see here that there are various stages in which this VAT was incurred. We have the manufacturer, we have the wholesaler, we have the retailer, and the consumer. And they said there was no closing inventory at each stage. So what it assumes here is everything you bought, you sold all. Because if you didn't sell all, we are going to look for the value of the items you sold and all that. So let's look at it in this way. So we have, we're going to make a 2 naira sign here. So the first one is manufacturer, doing manufacturing. So you can say manufacturer. You can now put doing. Okay. Now, what did doing do? Doing sold its vatable product for 4 million. So you will now say vatable sales. Okay, vatable sales, we have 4 million. Now, we are not told here that this is VAT, input VAT, or this is inclusive of VAT. So this is the revenue they derive from it here. So what is the output VAT? So I will come here and say output VAT will be 7.5%. So here 7.5%, not 7 over 1, not 7.5 over 107.5 as we did before. So I will say 7.5 divided by 100 multiplied by 4 million. That will give me 300,000. So this is going to be, so this is going to be 300,000. So this is the VAT from the manufacturer, output VAT. Of course, we are not told input VAT because we are not told what the manufacturer purchased in order to prepare this. So we just don't have that information. So this is the VAT is going to pay. So now the next one here is the wholesaler. So you give a one line and you use wholesaler here. Wholesaler. And who is the wholesaler? A Kmode. So I can open a bracket and put a Kmode. So this is what a Kmode, first one was doing. So this is a Kmode. So what happened here, we'll bring out the vatable sales. Vatable sales. So what did they sell? Now, a Kmode sold to retailer for 7 million. So what you do now is what the Kmode bought for 4 million, they sold for 7 million. Now, what is the VAT on this? The VAT on this, okay, I should be able to do 3 naira sign. Let me use a 3 naira sign to make this clear. All right. Now, this is output VAT. So this is 7 million here. Output VAT should be 7.5%. So the output VAT of 7.5 of 7 million. So this is 7.5 divided by 100 multiplied by 7 million. That should give me 525,000. So I'll come to this second naira sign and put 525,000. That's your output VAT. Now, this wholesaler bought it from manufacturer. So you will say vatable purchases. Vatable purchases happen to be 4 million, right? And input VAT, which is 7.5%. You know, this VAT that was collected by the manufacturer, it was a commodity who suffered it. To the manufacturer, it was an output VAT. To the wholesaler, it's an input VAT. So you bring this input VAT here and 300,000. So you are netting it out from the output VAT. So what you will now do, you will say VAT payable should be the difference between the output and the input. So we have 525 minus 300,000, which is 225. So I'll bring it here, 225,000. All right. So we now have the next person should be the retailer, Mrs. Egunjobi. Mrs. Egunjobi. So we'll do the next, give the next line, and you say retailer, Mrs. Egunjobi. All right. So we have vatable sales. Now, how much did Egunjobi sold? Egunjobi sold to final consumer to 8,400,000. So I will come here. This is 8,400,000. This is for the final consumer. So what happened here? output VAT is supposed to be 7.5%. So what is 7.5% of 8,400,000? 8,400,000 multiplied by 7.5 divided by 100. Now that gives me 630. So I'll come here, 630 is here. All right. Now we will now look at VATable purchases. So VATable purchases was the amount he purchased it from wholesaler. Wholesaler sold for 7 million. So he sold it for 7 million to retailer. So the VATable purchase is 7 million. Right? What is the input? Input VAT at 7.5%. You don't need to calculate again because this VAT was suffered as a result of sales from wholesaler to retailer. So this 525 is what is here. 525. So 525, let me write that well. 525. Okay, so when you net that, so this should be your VAT payable. All right, so what's the difference? 630,000 minus 525,000. That gives me 105,000. So I'll come here to put my 105,000. And that's the last. So this is total VAT payable. So the answer we get here is the total VAT payable. In my calculator, I have 105,000 already. So let me add it to 225,000. Then let me add it to 300,000. And I get 630,000. 630,000. 630,000. Now, this is correct. And can you notice something here? At all the stages, the VAT suffered by the wholesaler was net off with the VAT collected by the wholesaler. So whatever VAT suffered by the wholesaler was reimbursed when he collected the VAT that was made from the sales made to the retailer. Now the retailer suffered a VAT, and when he's selling to the final consumer, it is taking out the amount he suffered at VAT and paying the difference to the government. Now, if you add the manufacturers, wholesalers, and retailers' VAT, it is equal to the VAT suffered by the final consumer. So, what does that tell you? The brunt of VAT is suffered by the final consumer. So, any final consumer of any item that is VATable, you can't claim input VAT on it. You have to suffer the VAT. So it means that those people that Mrs. Egunjobi sold to, they would have paid with VAT. But there's no way those people can go and claim VAT because they're not using it for any other reselling purposes. They are finally consuming it. So at multi-stage level, the total of all multi-stage VATs, the sum of it together should equal to the VAT suffered by the final consumer. That is the solution to this question.
This meeting is being recorded.
Now let's take another example of VAT calculation. Okay, so we'll come here and look at it now. We are looking at March 2022, question number 4. So let's indicate that in our series of solution. This is Insight. March 2022, question number 3. Is it question number 3 or 4? Question number 4. Question number 4. So that's what we are taking down. And the question says, Logudu Sweets Limited is a company engaged in hospitality service. So this the company's name, Logudu Sweets. So let's say Logudu Sweets Limited. Okay, so that's the name of the company. We are told that they are engaged in hospitality services. So hospitality services could be like hotel and stuff. The company prepared its financial statements up to 31st December of every year, and it is registered for VAT. So it is a registered agent with the Federal Inland Revenue. And so the VAT account in its 2019 ledger showed the following. In their VAT account, this is VAT for material, VAT paid on materials for kitchen. So that's the amount paid for kitchen. VAT charge on food and drinks and all of this. So we're going to consider all of that. So this is the VAT paid account, VAT account. All right. So this is the VAT account. So we are told here, A, compute the total amount of VAT due to FIRS for 2019. Now, I'm wondering, VAT amount remitted to FIRS is 3 million. Yes, 3 million. Why are they asking us again to determine compute the amount due to the FIRS? Now, this is because it is possible that this amount paid to FIRS is not the amount that is supposed to be due to them. That's why the B part is saying determining the balance remittable for the year. So if we know the due amount to FIRS and we remove it from the amount already remitted to FIRS, we will get the balance. So our first task is to get the amount due to FIRS. So how do we do that? So that's the first thing to do. The A part, VAT due to FIRS in year of assessment 2019. So this is what we are going to find out first. All right, so how do we do that? We go now to check all the items one after the other to see which of these ones are qualified for VAT. So I can still put my Naira sign. Let me still put my 2 Naira sign. In this question, they put 3 zeros. I can decide not to put 3 zeros. So I'll come here. VAT paid on materials for kitchen. What does that mean? All the materials you use in your kitchen, you are a hospitality service. So the amount on materials used for the kitchen, these kitchen materials are supposed to be used to provide sales or hospitality services. So these are vatable items. So these are the amounts you you paid. So you have paid this amount left. So that's why it is here. So 1,320,000. So this amount is paid. Okay, so let me leave the ones that are paid first and look at the input VAT. So this first column here is the amount charged. So if you look at this account, is balanced 6969. These are the ones you received, these are the ones you paid. So let's go for the ones that we received first. VAT charged on food and drinks. Yes, these are the VAT charged on food and drink, 2310. So I will say output VAT. This is output VAT. So say VAT on food and drinks. So how much was that? 2310. So this is 2310. Remember, I didn't put 30 sign up there. So I'm done with that. Now the next one is VAT charged on accommodation. Of course, people will need accommodation and it's vatable. 3225. 3225. Let me write it down first. 3225. So this is VAT on accommodation. Okay. And the third one, we have VAT. Okay, is this one here? Let's see. VAT charged on other services. So any other services and you charge VAT and it is vatable, this is a hospitality company. They need to charge VAT for many of their services. So this is going to be, since you've charged VAT on it, it's going to be part of your VAT input. VAT on other services 1365. 1365. 1365. So I will say VAT on other services. So if I look at it now, everything is done. If I add all of this, I'm getting 6,900,000. So no need adding them again. No need trying to calculate with calculator again, because I know if I add this, I'm having 6,900,000. So this is total output VAT. Okay, so now let's go for input VAT. So we start input VAT. So what are those input VAT? Let's check all this paid here. Now this is paid on materials for kitchen. So those materials for kitchen are supposed to be used to provide kitchen services. So these are not kitchen equipment. These are materials for kitchen services. So this is input you paid and you're using it to provide kitchen. Okay, kitchen is supposed to be providing the food and drinks. So these are materials. Maybe you buy food, maybe all the food stuff, the raw material, and other things you bought for preparing food, because drinks is separate. You're going to, you know, buy drinks, right? But food, you buy materials to make food. So those materials you make food, you've been charged 1320. So you are going to use it to become your input VAT 1320. Okay, VAT on kitchen materials. So this is, let me write the materials well, 1320. Then the next one should be, so that means I've taken this. Okay, let me tick these ones too. So I've taken this. So it remains this, VAT paid on drink for resale. Okay, that's 150. VAT on drinks, VAT on drinks for resale. So anyone that is for resale, so that's 150. Anything that will make sales is vatable. Then look at this 188. VAT paid on furniture and equipment for room. Okay, so the furniture and equipment that you suffered VAT on when you want to use to design or design customers' room, you suffered VAT on the equipment. But the equipment are not raw materials. The equipment, you are the final consumer, all right? It's all like kitchen materials where when you finish using the kitchen materials to make food, the food is being sold and people consume it and they are final consumers. Now, furniture and equipment are assets that are not fully consumed. So this is asset. You're paying VAT for an asset. So you shouldn't charge anybody VAT. The VAT you paid for an asset is suffered by the company. So this will not qualify. Now, VAT paid on legal and professional services. So you paid VAT, you're not going to recover this VAT because you are the ones who consume it. So this is the amount remitted to FIRS. So that's not a VAT paid on anything. This is amount remitted. So we are not going to use this to recover. So this is supposed to, we are supposed to try to see whether this 300,000, this 3 million, whether we are going to judge it with what we are going to calculate now. So let's leave this one for now. So, and this is your balance in December. That means this is the VAT account, which is you are owing this amount in December. So let's see, okay, or this is the VAT, yes, this is the VAT balance in December. So let's see whether, now let's add these together, these two. So this should be 1,470,000. So this should be your total input VAT. Okay, so now the next thing is to look for the amount due to FRS. So this is VAT due to FIRS. So we have 6,900,000, 6,900,000 minus 1,470,000. So you're supposed to give 5,430,000 to FRS, 5,430,000. So this is the amount due to FRS. So you've answered the first part. VAT due to FIRS in year of assessment 2019 is 5,430,000. So that's the first part. Then there is a second part. Second part is asking you for sorry, the VAT balance of VAT remittable for the year. So I will say B, balance of VAT remittable for year of assessment 2019. All right. So you start. Amount due to FIRS. How much was that? It is this 5,430,000. 5,430,000. Then we have amount already paid to FIRS. So in this question, we are told here that amount remitted to FIRS is 3 million. So it means that this is talking about this. So we have paid this 3 million. So you will come here and remove the 3 million that you have paid. So when you remove that, the balance is the difference. So balance of VAT to be remitted is simply 2,430,000. So this is what you are supposed to remit at the end. So you've remitted 3 million before, and you're supposed to remit 2,430,000. Your VAT balance is telling you 2,170,000. This is as a result of including this that you paid but was not supposed to be, this 188 and 68 was not supposed to be. So you can imagine this 188 plus 68 was not supposed to be. If you are to add it to 2,174, you find out that it is that 2,430 that should have been the balance. So normally, if you included all these VAT that is not supposed to be input VAT in your VAT account, it will make your balance to be smaller. But if you exclude them, then the balance that you are having here should also equal to the amount of balance that you're supposed to remit to the FRS. So that's it.
This meeting is being recorded.
Now we've done that question. Let's look at the C part of that question. It has something we should consider. State 5 tangible items exempted from value added tax. Now, tangible items are goods. That is what they mean. If they said intangible items, then that could be services. So look at the solution here. Tangible items exempted from VAT. We have medical and pharmaceutical products, basic food items, books and educational materials, newspaper and magazines, baby products, commercial vehicle and their spare parts, agricultural equipment, fertilizers, veterinary medicine, all exported goods. So you are supposed to remember these items. All right, let's take one more to make our knowledge fill our knowledge gap. Now, this question is similar to what we solved before. Now, this is Ola Nigeria Limited. It's a company that engages in hostel services. The company prepares financial statement up to 31st December every year and is a registered VAT agent. In 2020, this is their ledger. Now, this is VAT paid on materials for kitchen. See, it's the same thing, but they have arranged it with different figures. So we are going to do the same thing. We are asked to compute the total amount of VAT due to FIRS, the amount of balance for the year. So let's do it one more time. The name of the company is Ola Nigeria Limited, and this is 2021 September. So let's come here, and this is Insight, September 2021, question number 4. So VAT is a popular question that usually comes up. So this is Ola Nigeria Limited. So your A part is VAT payable. Of course, when writing VAT, it's all caps. VAT payable to FIRS for year of assessment 2020. I think that's what the question asked. All right. So so VAT payable for the year 2020. So we'll have to start with the input VAT. So we'll take it this way. So we can do our 2 naira sign. So let's start with our 2 naira sign. So we could start with output VAT. So what are the things that constitute the output VAT? VAT charged on food and drinks. So VAT on food and drinks, 15.4. So I will say VAT on food and drinks. You can see this is 15,400. Let's see if it was 30 sign, 3 naira sign was not there. So that's the actual amount, 15,400. VAT on accommodation, 25,100. VAT on accommodation, 25,100. VAT on accommodation, 25,100. Then let's see, we also VAT charge on other services, 9,100. VAT on other services, 9,100. So what happened now is we are going to sum this up. So this is output VAT. So let's bring our calculator and do it. 15,400 plus 25,100 plus 9,100. That gives us 49,600. So this is 49,600. So now that we've had our output VAT, the next thing is input VAT. So what constitutes our input VAT? We have VAT paid on kitchen materials, 8,800. So we say VAT on kitchen materials. So we'll do it under the first naira sign, 8,800. All right. Then VAT paid on drinks for resale, 1,000. VAT on drinks for resale, 1,000 naira. And the next one is VAT on equipment for rooms. This is not VATable return. You cannot claim this input VAT because this is equipment. VAT paid on legal services. Who consume it is the company and not the customers. This is not going to work. Now, this is the amount remitted to FIRS. So we stop so far. So our input VAT is going to be just 2. So you will say input VAT. This should be 9,800. So you're going to put it in bracket because you are going to remove it from 49,600. So we bring our calculator, 49,600 minus 9,800. That will give me 39,800. 39,800. So that's here, 39,800. So this 39,800 is the VAT remittable to FIRS, 39,800. So that's the first part. The second part, the B part, so this B, balance to be remitted to FIRS for 2020. So let's look for it. We are told is amount due to FIRS. We have it as 39,800. We have it as 39,800. Amount already paid to FIRS. How much have you already paid to FIRS? We found out that amount remitted to FIRS is 20 million. So you have paid this amount, 20,000, yeah, 20,000. This is the amount you have already paid, 20,000. And so the difference should be 9,800. So this is the balance to be paid to FIRS. So that's it for the calculation part. Now the question is telling us that distinguish between value added tax and withholding tax. These two taxes are different. So let's see what the answer is going to be here. Value added tax and withholding tax. What's the difference? Okay, so let's check the answer. Okay. Oh, so it's supposed to be 19.8, not 9.8. All right, my mistake. It's supposed to be 19,800. Sorry for that mistake. Now, VAT is not a substitute for withholding tax. Now, some people usually say, if I charge you VAT and you are paying me and you are withholding my tax, it has net off. So I charge you VAT, you charge me withholding tax, and everything is done. So it's a substitute. No, it is not a substitute. So the fact that you were charged VAT and you're supposed to now charge withholding tax, you don't use withholding tax to recover your VAT. A vatable services is still liable to the deduction of withholding tax. So they are not substitute. 2, VAT is a tax on consumption. We saw it here in the 2 questions or 3 we solved. Is on consumption, whereas withholding tax is an advance payment at which the sufferer is entitled to deduct from his actual tax liability. 3, in case of VAT, the sufferer is the consumer of the vatable supply. So the person who suffers the VAT is the final consumer, as we saw in question 1. The final consumer of the vatable item is the sufferer. Whereas in withholding tax, it is suffered by the person who is receiving payment. In the case of this person here, if the manufacturer is the one who is paying and is receiving this payment, withholding tax is charged on his account. So the person who is receiving payment is suffering withholding tax. In the case of VAT, the final consumer is the one suffering VAT. Now, VAT is currently at 7.5. whereas withholding tax ranges from 2.5 to 5 to 10%, depending on whether it is a corporate person or an individual. The confusion in point number one, where people use VAT as a substitute for withholding tax, is because then VAT was 5% and withholding tax for supply is also 5%. And so some people got it wrong there and were using it to deduct and a substitute for each one. Now, VAT is shared among the three tiers of government. So it is the FIRS that collects it, but is shared by the three tiers of government. Whereas the withholding tax is collected by the, the by the by the three tiers of government, and the FIRS is collecting for federal government. So that's just it. So that's what we have to take now, take home for the topic of VAT. We have answered about 4 questions on the topic of VAT. We discussed March 2024, question number 2. That was the first one we did. Then we went to September 2023, question number 3. Then we went to March 2022, question number 4. Then we also solved September 2021, question number 4. These are 4 examples of that. I would urge you to do some practice so that you can get acquainted with how these questions are being tested and how you can be proficient in it. So thank you so much for the time spent in the class. We will see again in our next class when a different topic will be discussed. Thank you.